Welcome, everyone. We're pleased you could join us today for our webinar. It's the COVID-19 Business Assistance webinar from Capital Connect. Because of the current challenging situation we're all in, we're really pleased to be able to meet with the group virtually to talk about some very important issues affecting startup and small businesses today. The standard procedure we like to follow for this webinar is we would ask you to mute your line. You are muted by us as well. The meeting is being recorded. For questions, we ask that you submit those in the chat box and that you address any questions to individual panelists or to the group as you wish, and we will take those at the end of the webinar. Very pleased to be meeting all of you today and introducing the panel that we have with our Capital Connect team. I'm Marnie Levine. I'm President and CEO of Launch New York. I will be joined today with some tremendous colleagues from the Capital Connect collaborative effort. Dion Jacques, from Deputy Director for PathStone Enterprise Center, Sherry Falk, Assistant Vice President for Pursuit, and Janusz Sanmugaraja. Sorry, I knew I would do that, Janusz. Janusz Sanmugaraja. Thank you. Got it. Took me a few times. Economic Development Director for Westminster Economic Development Initiative, also known very commonly as WEDI. We're very pleased that today we're here on behalf of an effort that has been sponsored by JPMorgan Chase & Company. Capital Connect specifically, if you are not familiar with us, we are a collaboration that has been formed on behalf of assisting startup and small business entities throughout Western New York and even beyond. We are comprised of 4 local nonprofit organizations who really are committed to increasing the business opportunities for underserved businesses in neighborhoods, particularly that are just calling out for economic development. So particularly low-income, minority, women, and immigrant-led businesses, and those innovative entrepreneurs are really trying to make a difference in our community. We work together as what are known as Community Development Financial Institutions, which is a U.S. Department of Treasury designation for organizations such as ours who are specifically serving these target neighborhoods in communities throughout the United States. We especially are excited about the work that we're doing in upstate New York. Capital Connect, sponsored by JPMorgan Chase, specifically was designed to make it easier to access the kind of resources that we provide. We know at this time it's particularly challenging for small business, really unprecedented as we constantly hear in the news. And so we really wanted to step up the availability and access to all of you to try to understand what are your best options in terms of financing at this time, particularly debt financing, and also what kind of business support services are available for you. Capital Connect provides a one-stop portal at capitalconnectny.org, as we show on the slides here, for business owners seeking funding and or business assistance to help address the challenges in your business, as well as your financing needs in particular. The 4 leading nonprofit organizations active in Capital Connect will help you to eliminate the kinds of barriers that you may be facing, particularly at this time, in terms of accessing capital and ensuring that you have all the resources you need and an opportunity to grow. We know at this time many businesses are seeing an opportunity to grow, but that also can present its own challenges. So what we'll talk about today is a little bit of a quick introduction to the 4 Capital Connect partners. We will be focusing on a couple of key areas that we know have become areas of concern and challenge, and something we thought important to cover with you today. Credit management during the COVID-19 crisis, the predatory lender landscape and making sure that you find the right financing resources, and emphasizing the local resources that are available today, right here and now for your business. So first of all, what I do like to address is that we're excited to support all kinds of companies, but we also appreciate there are differing needs for different companies, particularly as they may be more what we call small business or Main Street business versus high growth potential businesses. So thinking about where you fall in this category often helps you consider what kind of resources might be important for you. So when you think about where you fall and the Main Street business side of the equation on the left, typically that might be a solo founder, and this is not every case, but many, a single location or certainly local or regional locations, fewer than 10 employees. There's a quick opportunity to start generating product or service revenues. Typically, 70% of these companies, so the vast majority, have less than $1 million in revenues annually. And the growth tends to slow down after profitability, so you can hit the ground running quickly, get some cash flow, but then tends to kind of plateau with more single or low double-digit growth each year after that. Often your business is really intended as a way of life. It's a way to support your family, which at this time is incredibly important given the high unemployment rates. The financing vehicles, very appropriate to today's discussion, are typically going to be debt financing or loans, as we call them. And the other side of this picture, you see that we have kind of that mountainous cartoon-like diagram. High growth potential businesses are those that also are just, maybe just starting from scratch. They may just have one person, but they often will have a couple of co-founders. The concept is to have an idea that we at Launch New York tend to describe as $10 million in annual revenues by the time you're hitting 5 to 7 years. Typically, there are going to be multiple or virtual locations, more than 10 employees, and a service area or sales or market area that really could be around the globe. Certainly may be very apt to be mobile kinds of technology-based services and products as well. The focus is on growth and sort of what we call hockey stick growth. And the focus is more on building an entity that is introducing some, in many cases, disruptive kinds of products and services. So the focus is on the company and its products, not simply providing a steady income, but really that hockey stick type growth. There is an aim among these founders to exit the business. So the kind of financing that you're obtaining really needs to be along a pathway towards ultimately often being acquired. In some cases, even today, still an initial public offering. The financing here typically is via equity or investments, as it's known, as opposed to debt, at least in the early days. So Launch New York, among the four of us, CDFI and Capital Connect partners, Launch New York is the nonprofit in the group that focuses on the equity capital piece and high growth potential companies. Shortly, you'll hear from 3 of my colleagues that are very focused on businesses that would be using debt financing, and very often will be more of the Main Street and small business variety, and perhaps even moving into some larger established businesses. We are a nonprofit venture development organization. So just so it's clear for folks, we are available here even in the early days before a company even has a product to assist with 2 pieces of resources. One is mentorship, and we've worked with over 1,100 companies since we started in 2012. We do cover that entire shaded geography that you see there. People just need to go to capitalconnectny.org, and you're going to be able to get access not only to what we have, if it's appropriate, but all our other partners. The mentorship is an important piece, but then again, for today's topic, we want to talk about financing. So we also provide access to the most active seed fund in New York State. Right now, we currently have 56 companies we have funded with their initial equity capital. And we're very pleased to say that while nationally you see a lot of these underserved communities and underrepresented entrepreneurs are exactly that. They're often 1 to 10% of the companies that are being funded by venture capitalists, for example. About 50% of our companies actually are minority or women-led. So we're very pleased to be part of this CDFI family nationally as well as locally. And we're also offering a clean tech incubator with resources for companies that address areas like sustainability as well as renewable energies. And we're very pleased to offer through JP Morgan Chase a program in addition to Capital Connect that actually supports underrepresented founders. So that's something similarly you can access by coming through capitalconnectny.org. So I'm very pleased to hand off to Dion Jacques, Deputy Director for PathStone Enterprise Center.
Thank you, Marnie. Thanks to all who have joined us today. I hope that you're all doing well. You and your loved ones are staying safe and healthy. So PathStone Enterprise Center is a nonprofit community development financial institution, and we focus on economic and small business development in predominantly financially underserved areas throughout Western New York and upstate New York and in Puerto Rico. Our portfolio is a little bit more than $6.5 million in outstanding loans. A majority of those are outstanding in Erie and Monroe counties, but we do have some loans in a few loans in other counties in between. And 85 of those loans are 85 of our loans, of the loans in our portfolio, are in Puerto Rico. We provide small business loans from $5,000 up to $250,000. And in addition to the small business lending, we have a robust technical assistance program to assist emerging and existing entrepreneurs and small business owners with the technical skills that they need to start and run a successful business. We provide one-on-one counseling and expert advice, group education and training. We've been doing our workshop series in person up until COVID hit, but we are pivoting to taking all of our training online, and we started doing that in April. And if you visit our website or our Facebook, you can stay abreast of the workshop series that are upcoming. We also assist small business owners with developing their business plan, financial forecasting. We put a lot of emphasis on repairing your credit and building your credit. Additionally, website development and e-commerce. And in this environment, possibly people are looking for assistance with closing their business without too much of a personal or business financial impact. And we will help with that, as well as mentoring and coaching. Again, if you'd like to know more about what we do at the Enterprise Center, you can visit us at the enterprisecenterinc.org or follow us on Facebook at PathStone Enterprise.
Terrific. Thank you so much, Dion. Next up, all right, Sherry Falk, Assistant Vice President for Pursuit.
Thank you, Marnie. Pursuit, we've been helping businesses across New York State for over 60 years. Pursuit is comprised of 3 affiliates, formerly known as New York Business Development Corporation, Excelsior Growth Fund, and the 504 Company. We assist businesses by providing loan programs and advisory services with a special focus on minority-owned, women-owned, and veteran-owned businesses. We offer our customers a convenient, quick turnaround on lending decisions, and we couple that with a one-on-one attention you come to find from a local community lender such as us. So you can find more information on Pursuit at pursuitlending.com, and of course on our shared website for our collaborative, capitalconnectny.com.
Great. Thanks so much, Sherry. Just want to remind everybody, by applying directly to capitalconnectny.com, we will review your information and we will make sure you get to the right one of our great partners. So introducing our next partner, very pleased to introduce again Janusz Mujiraja. And Janusz is from WEDI, the Westminster Economic Development Initiative.
Hi, everyone. So WEDI was founded in 2006 by the Westminster Presbyterian Church in Buffalo, New York. That church on Delaware Avenue. The organization is now a standalone organization. It has its own funding and its own staff. WEDI provides business microloans ranging between $500 and $20,000. And everyone that WEDI works with will have the opportunity to also access a financial education, business education, as well as business mentorship, various kinds of business mentorships and, marketing, accounting, anything that you may need. To give you an idea of the types of businesses that WEDI has served in the past. 55% have been women-owned businesses, 80% are minority-owned businesses, 70% were startups, so they were less than 12 months in operation, or they weren't operating at all when we began working with them. And 95% of them are micro enterprises, meaning they are operating at a pretty small scale, and they usually have less than 6 employees. So that's WEDI.
Terrific. Thanks so much. Next, we'll actually continue with you, Yana, for the credit management topic.
Yeah, thank you. So we are going to jump right into some of the topics that we wanted to discuss today. So I'm going to be covering credit management, where I'd like to go over some ways that you could be keeping on top of and protecting your credit during the pandemic and the economic crisis. And we'll also review some local Western New York resources that are available to help you do this. So Marnie, could you go to the next slide?
Sorry.
So a couple things. First, annualcreditreport.com is a free service that used to allow you to run a detailed credit report on yourself for free once a year. Now this service is being offered free weekly until April of 2021. That's April of next year. That means they are allowing you to run your free detailed credit history report on yourself every week. So once a week you can run it. Annualcreditreport.com, it'll pull your credit history report from all 3 credit bureaus, so TransUnion, Equifax, and Experian. And when it does this, it doesn't show up as an inquiry on your credit history report or credit report. So in other words, it doesn't hurt your credit, and it doesn't appear as if you're looking for new credit when you run this. So it's just pretty important right now for you to be aware of what's being put on your credit and how your creditors are reporting. So I definitely recommend you utilize this free service. That again is going to be free each week until April of next year. Marnie, could you go to the next slide? So the next thing is communicating with your creditors is the other really important thing that everyone should be doing during the pandemic and economic crisis. For the most part, all creditors are making accommodations with their borrowers. Any of these accommodations that they make are protected under the Coronavirus Aid, Relief, and Economic Security Act, or CARES Act. So accommodations, when I say accommodations, these may include any sort of negotiations or deals that you make with your creditors regarding your credit payments with the creditor. And when you make an accommodation with a creditor, the CARES Act will protect your credit from being negatively harmed by any of these accommodations. On the next slide, I'll go over some examples of accommodations depending on the type of financial product you have. So when you're talking to your creditors, here are some accommodations that you could ask for depending on the financial product that you have. So if you have a mortgage, some options may include, well, if you can pay your mortgage, definitely pay it. If you are having trouble, contact your lender. You do have a right to forbearance up to 180 days due to the pandemic, but I recommend you definitely contact your lender first and see what else they may be offering as well. In your state, there's also a suspension on all foreclosures as well as evictions for those of you paying rent until August 20th. And then also, if you're having trouble paying your mortgage right now, there is a local resource, NeighborWorks Community Partners. They are offering foreclosure prevention in the form of financial assistance and financial counseling. So I do recommend reaching out to them. If you have a student loans, if your student loan is with the federal government, you should know that all of your payments are deferred until September 30th. Now, if you have a student loan with another creditor, we recommend you just contact your lender to see what forbearance options they are offering. Almost all of them are offering some sort of a forbearance option at the moment due to the pandemic. And then if you have an auto loan, here are some accommodations you can ask about. So if your income schedule has changed due to the pandemic or crisis, you could ask your lender if it's possible to just simply move the date within the month when your payment is due so that your payment falls more in line with when you receive income each month. If you are currently behind on your payments, though, you could request a payment plan from your auto lender, but you should just remember that when your payment plan ends, your monthly payments may be temporarily higher than what it normally is each month. And if you cannot afford your auto loan monthly payment at the moment, even with a payment plan, try asking for a payment extension or a deferral on your auto loan, which is just moving a certain number of your monthly payments for your auto loan to the end of the term of that loan. Now, if you're falling behind on your student loans or auto loans, or you feel like you're going to, I recommend you definitely reach out to another local resource here in Buffalo, Consumer Credit Counseling Services of Buffalo. They offer financial counseling, payment negotiation support, and they also offer some debt consolidation services. And then on the next slide, I have just some final things regarding credit management during the pandemic. So any of these agreements that you get, any agreements or accommodations that you make with your creditors, we recommend you also get these in writing. Another great resource where I actually got a lot of this information from is the Consumer Financial Protection Bureau and their website, which has a lot of specific things that you can ask your creditors for, or more examples of accommodations depending on the different financial product you have. So this is a really helpful tool, and I recommend using it. The CFPB is updating it on a daily basis with new information as well. And then, as I've been mentioning, there are two great local resources that could help you with some of this personal financial management and credit. Consumer Credit Counseling Services, CCCS of Buffalo, and NeighborWorks Community Partners, both who offer credit and financial counseling and financial assistance. And that's about it for credit management during this pandemic and economic crisis. Next, I'm going to hand it off to Sherry from Pursuit, who will be reviewing predatory lending and some important things that you should be looking out for right now.
Thank you, Janusz. There is no question with the advances in technology and availability of data, we are seeing changes in how consumers and small businesses are securing financing. The online lending space really took off around the Great Recession of 2008-2009, and estimates by the S&P found that 5 large fintech lenders, financial technology lenders, such as some of those that you see on your screen, OnDeck, Cabbage, Credibility, Square Capital, and PayPal Working Capital, originated $6.5 billion worth of loans in 2017 and have shown a year-over-year increase in lending since 2014. The online marketplace of lenders typically can provide funding decisions in 48 to 72 hours. They offer short-term maturities. And in my experience when working with business owners have used them, they also come with a prepayment penalty. So I call your attention to the institutional lenders because the allure of fast money is certainly a factor for some, but consider the rapid repayment of these loans that can translate into weekly, if not daily, automatic deductions from your business checking account to repay the loan. If you are considering or being solicited by any of the companies shown on the slide, it is important to understand the true cost of capital, including interest rate and all fees associated with the loan before you move forward, as that is how most of these direct lenders stay in business, by charging high interest rates and fees. So how do you know if you are dealing with a predatory lender? We'll go to the next slide. On this slide, we see 6 warning signs that you might be working with a predatory lender. The definition of predatory lending is any unfair practice that inhibits a borrower's ability to repay their loan. It includes any actions carried out by a lender to entice, induce, and assist a borrower in taking a loan that they might not be able to afford or do not need. Predatory lending benefits the lender and takes advantage of the borrower's lack of understanding of the loan terms and conditions. And in today's times, such as COVID-19 crisis, bad players pop up to target vulnerable businesses with too good to be true offers. All the signs spelled out on this slide are equally important, but I would like to call out a few to your attention. And the first is getting trapped into a debt cycle. Some business owners find themselves with a predatory lender, and the only means to keep up on the payments seems like to just take out a new loan to pay off the old one with that creditor, and thus incurring additional fees and interest that becomes unaffordable. This short-term solution can have a domino effect, and it keeps people in that cycle of debt. So just a caution there. Second sign I'd like to call out is not having the information you need to compare different loan programs because they're not advertising an APR. And that brings us to our next slide on the true cost of capital, or your all-in cost of capital. On this slide, we wanted to capture what to look for, whether you're dealing with any lender, really. But since today's topic is business loans, these are some of the costs that would typically come with business lending. And the takeaway here is transparency. If you are looking to take out a loan for your business, and there are a lot of options out there even during these times, look for all of these different things you see listed here. And if they're not available, ask for them so you can have an apples-to-apples comparison against other products to make the right decision. My advice is to build a team around your business, and that can include not only your banker, where you have your personal and business checking account, but also all the CDFIs on the webinar today. We're all here to help you navigate your funding choices. On the topic of predatory lending, just keep in mind, generally speaking, we always recommend to go and talk to your banker first. And if you don't meet their eligibility requirements, to come to any of the CDFIs on the call today. Our criteria is more flexible. But if you do find yourself weighing options with other lenders, just be cautious if that lender you're speaking with does not have any credit requirements and is not being transparent and spelling out the terms and conditions of the loan. We're here as Capital Connect to assist you through that journey, whether or not you end up taking advantage of any of our programs. We're here to help you navigate it. And on the next section of the webinar, we'll go through some local resources.
Great. Thanks so much, Sherry. Terrific. Let's turn over to our local resources. We've obviously been throwing quite a bit at you, but we realize at this time it's really important for you to understand who all is available and ready to respond, knowing we're all operating a little bit differently. So first of all, we will relief programs, talk about the Neighborly Fund.
Yeah, so I can, this is Janesh from WEDI, and I'll be reviewing the Neighborly Fund. The Neighborly Fund is a new relief program that's being available for small businesses in Buffalo and Erie County. The Neighborly Fund is offering no interest loans and grant awards to businesses. And the fund will be operating at least for the next month or so. In order to apply, you can visit theneighborlyfund.org. That's theneighborlyfund.org, and the application will be made available there.
Excellent. Thanks, Janesh. Sherry, the RDC Disaster Relief Business Loan?
Yeah, so the RDC is the lending arm of Erie County Industrial Development Agency, or ECIDA. So we wanted to put up their disaster relief business loan information. It can be used for working capital, accounts receivable, payable, payroll, rent, and insurance, as well as utilities. I believe that some of their eligibility is you must have at least 5 full-time employees and be located in Erie County. And the loan amount ranges from $10,000 to $50,000. More information is on the website provided, and ECIDA, for those that are on the webinar that would like a phone number, is 716-856-6525, extension 219, or certainly we can follow up after the webinar with more information. The Paycheck Protection Program, moving on to the next relief program, as most people know, is a program being offered by the federal government. Banks across the country, as well as other financial institutions, are intermediaries to the PPP. Pursuit is one of those. and we are still taking PPP applications. So those of you who have not applied for the PPP, I would encourage you to go to our website, pursuitlending.com, PPP apply to get started, or certainly you can give me a call. I am at 716-436-2977.
Great. Thanks so much, Sherry. And, for everyone on the call today, any questions you have, if you come in through capitalconnectny.com, we will be sure absolutely to get you to the right place. As I was mentioning earlier, there have been traditional ways that small business and high growth potential companies travel down the financing path, but these are different times, to be sure. So extra resources we have available, as much as equity financing is what I've talked about from Launch New York's side and high growth potential businesses. In fact, we are finding that virtually every business ought to consider these debt financing opportunities, as well as these COVID-19 relief programs, such as the PPP. So launchny.org /news/COVID-19 is a page that we keep updated. As many of you who are aware of the PPP and how it has gone, it's in a second cycle now. There is still funding available. The first cycle was depleted pretty quickly, but now there are companies who actually have the dollars and are in the spend period and are looking at how they will need to report on those dollars. And also there is an important loan forgiveness element to it. So if the monies are spent in compliance with the regulations, there would not actually be any financing rate attached to those dollars. But again, really have to follow the details very closely. So I certainly encourage all of you to check out all of these resources. We are keeping them updated, but just know they are changing that quickly, just because we are assuming that there will be more public assistance programs for businesses, whether that be at the local, state, or federal level, because we know we're still really in the crisis period, and we're very hopeful that we're going to be able to be a one-stop shop for you to come in and get access to those resources. So with that, I'd like to open up the floor to questions from folks who are on the webinar here, and I see that I've got at least a couple here. Let me see. I'll maybe just field this quick one, since I can see that says, can you explain the difference between equity and debt financing? So equity financing is typically structured very differently. You don't pay any fees associated in the same way that you might in obtaining a loan. In fact, equity financing is intended to be financing that allows ownership in a company. So we appreciate that a lot of entrepreneurs who are starting a business, the concept of having someone else own your business or a piece of your business is something that may be new. Launch New York actually typically starts with what's known as a convertible debt note. So in many ways, while it sounds like it's a loan, it actually is structured in some ways like a loan, but it's intended to turn into ownership of your business or equity. So you may be wondering, how do I know if I need debt financing or equity? Typically, sources of equity are usually some type of investor. So Launch New York is an investor. Your relative could be an investor. So there are what are known as accredited investors, which are typically the first source of dollars. Again, with an idea that you're going to give a piece of your company, whether it's structured as convertible debt or initially as preferred stock, but somebody else is going to own part of your business. Generally speaking, investors want to make that investment with the idea of reaping a return, as opposed to just making the profit, if you will, off of the fees as debt capital is structured. So for debt financing, it very much is built on a business model that the lenders can essentially offer that service because of the fees that are charged on that loan itself. So very different environment, and we're happy to talk with you about size and scope of your business. But for Launch New York, we use a really simple measure. So if you're out there still wondering where do I fall, we use $10 million in annual revenues as the forecasted size of your business in 5 to 7 years in order for that to be what we call investable or attractive in terms of creating returns for investors. So hopefully that helps with a bit of that detail. Okay, some other questions here. Okay, Dion, thanks for mentioning that in Monroe County, some of the resources that are offered there as well. So there's some great links in the chat box that I encourage you to use. Okay, a question on how should I explore deferment with my creditor? I will send that over to my colleagues on the call.
I could answer that one. So exploring deferment with your creditor is honestly pretty simple. It really just takes communicating with your creditor, giving them a call or chatting with them. Everyone is aware of what the current situations are, and as I had mentioned, most places are offering deferments as a default right now. So I just recommend you talk to your creditor, and explain to them if you are having any financial hardships right now. They should be able to find some sort of accommodation, which may include deferment. And then the best way also, another good way also is just to be aware of what your options are and prior to speaking to them, so that you can communicate an option that works best for what your financial situation is to see if they can accommodate that.
This is Dion. I just want to piggyback on what Janusz said. I completely agree that you should do your due diligence before you pick up the phone and call your creditor to see what options are available for you: deferment, forbearance, forgiveness, loan restructure, and know which one would best suit your needs, your situation. And please, please, please do not delay contacting your creditor. Not opening your mail or putting off the issue is not going to solve anything. As Janusz said, everybody is aware, all creditors are aware of the situation, how small business owners and individuals are being financially impacted by COVID-19. So they are willing to work with you. So pick up the phone and make that phone call. If you need to, interface with them via chat, a lot of these companies now offer you different ways of contacting them. Just reach out. They won't know you're having a problem unless you reach out.
Great. Sherry, any further comment?
Oh, I completely agree with all the advice Dion just gave. I think all of our CDFIs are offering deferment if needed to our clients. And yep, can't stress enough that communicating with any creditor is more important, and certainly important during these times, because what any lender will look at in the future, and as we go from relief to recovery, is how business owners handled and communicated with their lenders. So just keep in touch with all your different creditors, and as we move into the recovery phase, that will serve you well.
Excellent, thanks. I have a question. If a business owner finds him or herself in a predatory lending situation and sort of has signed on the dotted line, what options does that entrepreneur have?
This is Sherry. So our CDFI, we do refinance existing business debt, which could include, loans taken out by some of these. However, like any lender, if the cash flow has already been so negatively impacted that there's an inability to repay, it can get challenging for someone, whether it's us or another lender, to refinance. So my advice is if somebody finds themselves with a predatory lender is to explore refinancing options with other lenders, including CDFIs, and also report, to their Attorney General's office who they're working with. I don't know if any immediate action would be taken, but at least it would be put on record. There are other resources out there in terms of, fair small business lending practices. I could send around after the webinar. I don't have the URL off the top of my head, but there are other ways to report as well.
Excellent. That's great. And I think you highlight the role of CDFIs. CDFIs, again, Community Development Financial Institutions. This program really was created because there was an awareness that there was a difficulty for individuals and projects and businesses, which is the sector we serve, to access capital, particularly if the entity is not what is considered bankable. So we're here really to work through some of the more difficult and challenging situations, and so we certainly encourage you to reach out with any question that you might have.
This is John. I just want to highlight the difference between a traditional bank and a CDFI. So you'll walk into a bank and you'll apply for a small business loan, and a relationship manager will look at you and say, "We're sorry, we can't extend a loan to you. Good luck. Come back when you have better credit score or collateral or whatever the case may be." A CDFI will say to you, "We can't extend a small business loan to you at this moment, but we will work with you to get you to a point where we can do that." So that's the big difference between us and a traditional bank. And when we talk about technical assistance, that is what we're talking about, how we help you to get to a point where you can qualify for a loan, providing you with the capacity and the skills that you need to increase your credit score, restructure your business if you're an existing business so you can qualify for a small business loan. We will work with you to get you there.
Excellent. That's great. And I can't say enough about the CDFI partners we're working with, because you can hear that we're really equipped to work with any type or frankly, any size of business. And Deanne, your comment reminds me to clarify as well that when a business owner is approaching financing and considering equity financing versus debt financing, it is a different process. So we have this same portal for you to come into. But for example, as you've heard reference to the phrase credit repair and credit rating, that is something that is not really utilized in terms of qualifying an entrepreneur in the equity financing world. It's a different process of qualifying the business, because we're not looking for you to pay back the money at all. That's really not our goal, where it is a goal, certainly with debt financing. What we're looking to see is that you have the ability to grow a business so that it would yield returns to the investors, including, in our case, Launch New York. So while we're certainly interested to see what your experience has been in managing financial matters, we are really focusing a lot more on how you currently have gained some traction. And these are much, I guess I would say, softer points than a credit rating score. So it is a different process. And that's why all of the CDFIs have really worked together in order to make sure that the business support, the technical assistance, and the mentoring that we provide you is geared toward the path that your business is on. So even if you're still feeling, a bit confused about that point or exactly where you're headed, or some of the challenges we've talked about today, the whole point really is to reach out. I know we're all working from home in interesting places these days, but we actually are finding that all of us have more requests than ever. And that's what we're here for. And we will, again, make sure that we get you to the right place. Okay, any other questions from either the webinar participants or our panelists? Anything else you want to bring up? Okay, great. Well, we will absolutely be sure to post additional updates on the resource pages that we have provided, at the COVID-19 resource page at Launch NY. We also certainly encourage you to visit capitalconnectny.org, and you can really do a pretty quick application there to just get some one-on-one connection to us. And we want to, again, recognize JP Morgan Chase for allowing us to create what you see here as a screenshot of our Capital Connect portal. And this collaboration, frankly, could not have come at a better time. We know how all of you are facing challenges that are new and different every day. We also have a number of client companies who actually have seen new opportunities, and we realize you need resources to pursue those and adjust to those. So that's as much a situation that should prompt you to reach out as a situation where you maybe need to restructure debt or have some interim finance solutions that can help you. So we certainly want to wish everybody safe, healthy path forward, but we also hope that you'll look to us to be a resource for you whenever you need. Feel free to visit us, and certainly we hope that you share this resource with others as well. I want to thank all of our panelists today. I want to thank all of the attendees for joining us, and we look forward to staying in touch. We certainly plan to have a continuing program. We also do have a sort of a sister site that we operate called upstartny.org, which is more of a digital entrepreneurship magazine for small and startup business scene in Western New York. And we encourage you to go there maybe when you're needing a little bit of inspiration, which we all seem to need at this point. But we know that you are all working hard, and we encourage you to continue to reach out. No matter what path you decide to take with your business right now, there are resources to assist. So please be in touch. Thanks again for attending today, and be well.